Hey guys, in today's video I'm going to be showing you how I made $2,000 in the last month on Topstep X using my exact entry model. So as you can see, over the last couple of weeks I've been able to profit consistently off of this model and have made a decent amount of money. And by the way, all of this, as I mentioned before, is on Topstep X on their 50K trading combine. As you can see through some of these statistics, I have a 67% win rate. And my profit factor is 5, meaning for every $5 I risk, or for every $1 I risk, I gain 5 back, and I have an average win-loss of 2.37%. So now let's talk about the entry model that I use. Oh, and just so you guys know, I traded on micro Bitcoin, micro Bitcoin futures and micro Nasdaq futures. And the two confluences that I use are fair value gaps and prominent highs and lows, equal highs and lows, and session highs and lows. If you don't know what those are, I have videos on the channel about them, or a bunch of other people probably have videos on the same concept. So, if you want to take a look, they're in my channel. But first, let's take a look at, or I'll just give a little recap on what fair value gaps and equal highs and lows are. Fair value gaps are basically a void in between price where, or a void or a gap in between where price usually comes into and then it continues that trend. So I'll try and find a good example of this, but 15-minute time frame. Let's see. All right, here's a good example. So as you can see on Nasdaq futures, we had this giant gap in between price. As you can see, the wick closed down here and this wick closed down here, meaning that there was a huge gap where orders were not able to be filled in this void. And as you can see, price stopped here. It came right back up into this gap. I think I may have shorted this gap because it was at market open when I usually trade. And it went down much lower. So this is a perfect example of it. As you can see, it went into the gap, came right back up, filled it, and then came right back down. And fair value gaps are what I like to call a continuation confluence, meaning that the trend isn't changing. Instead, you're just following the trend. So as you can see, we were in a downtrend, we came right back up, then we continued the downtrend using the fair value gaps. Now let's talk about the second one that I use with equal highs and lows. Now, while I don't use equal highs and lows as much as I do fair value gaps, I still use them as places to maybe put my entries or place stops. So if you take a look at this one, we can clearly see that this is a really good example, actually. So as you can see, we have a prominent high right here. As you can see, this was London sessions high right here. Let's see if it marks it out. It's not going to mark it out. Okay. But as you can see here, we had this prominent high that was like standing out, it was this one, I guess. And as you can see, we came right back up on here, touched it, and then we had a massive push down. So basically why I look at these is because these prominent highs and lows can be used as ways for identifying, key support and resistance levels. And it can also be where a lot of stops are. So if the stops get rated, then price will likely change structure and move to the downside or to the upside. It works for both. But now let's get into my entry model. So first, I'll just use the example from here. And so first, what I do coming to any market open is I like to mark out the 1 hour fair value gaps on both sides. So if you take a look here, we had coming into market open. So coming into 8 o'clock, we had a bunch of gaps. So first, if we were looking to take longs or if the market reacted bullishly at market open, you can see we had this fair value gap right here. And then in terms of bearish, well, if we come forward an hour, we can see that we had this bearish gap. So I can play off of both of these gaps, but now I'll scale into the lower time frames to see what happens. Okay, so as you can see, market opens at 9:45 and we start trading higher into these 15-minute fair value gaps. So my first rule is that either a 15-minute or a 1 hour fair value gap has to get hit in order for me to take a trade. So as you can see here, that happened. This 15-minute fair value gap got hit along with this 1 hour. I don't know if it formed yet or not, but now once these get hit, we scale into the lower time frames, which is going to be the 5-minute. So now that we hit this 15-minute fair value gap, we are going to be looking for shorts, as a bearish fair value gap tells us that we would likely continue lower, as we are not really seeing, or if the up move continues, we've played out this 1 hour fair value gap and we may trade higher. But the 5-minute chart will tell us a lot. So as you can see, we came down into this 5-minute, and then what happened is we just consolidated for a bit, but then what happened? We broke lower out of this 15-minute right here. So once we break out of this and show bearish structure on the 5-minute, what happens is I go into the 1 minute or the 5-minute, 2-minute, or 3-minute candles and try and find fair value gaps to take a trade off of. So on the 2-minute, we have these. Here, I'll just delete all these as all the fair value gaps got hit. So what I'm looking for is for an entry on the 2-minute or 3-minute, but so yeah, let's see if any of these play out. So what happens here? As you can see, we have this 2-minute fair value gap got hit, and let's see if we get a bearish reaction out of it. Looks like we do. So what am I looking to do now? And I am looking to short, because we had a 15-minute fair value gap that got hit. We saw a bearish reaction out of it. Then on the 5-minute, and then what happened was on the 2-minute or 3-minute, we formed a bearish fair value gap. It got hit. We saw a bearish reaction out of that 2-minute gap. And then what am I looking to do? I'm obviously looking to short. Let's do 2 or 3 contracts probably. Put stop loss above these highs right here, and we'll probably target a 1-to-1. So yeah, something about like right here, and let's see what happens. Gets hit within literally 2 minutes, and just like that, we made all of our money. So this is just one way that I like to trade, this is my way that I like to trade for value gaps. It's basically just following the trend. As you know, the trend is your friend. But now I'll show an example of it on Bitcoin, just so you guys can get an idea of what it would look like. And yeah, let's find an example of it. Yeah. All right. This Friday was a really good example too. Okay, so first, as we can see, first thing that we do is obviously we're going to mark out the 15-minute and 1 hour fair value gaps on Friday. So coming into this Friday, did we have any 1 hour? Let's see. Oh wait, sorry. This was all the way over here. My bad. Wait, where was it? Shoot. Oh yeah, it was right here. Oh my god, I can't even see. Okay, so yeah, so coming into the 1 hour at 9 o'clock. Or wait, did I take a trade? Oh yeah, I did. Okay. So yeah, so coming into the 1 hour here, as you can see, we already completed this bearish 1 hour fair value gap coming into market open. So I'm obviously going to be bearish for the first half. And then if we take a look at the 15-minute, we can also see that we're also delivering off of this 15-minute fair value gap that got respected. We saw a bearish reaction. So coming into market open, I'm heavily favoring shorts in this position. So yeah, so let's take a look at the 5-minute now. And what do we see here? As we can see, market opens, it dumps, but then we see an initial rally back up. What happens? We see this 5-minute bearish for value gap get formed. See it. We see a bearish reaction out of it. So at that point, I would short right there. Actually, let's see if we have 2 minutes. Like 2 minute for value. Oh, yep, same thing with the 2-minute. We saw this bearish for value gap get formed, and then a down reaction out of it. So what would I do? I would short right here. Put my stop loss above the 5 minutes fair value gap. Where did that close? So yeah, put it above here, and let's target a 1-to-1 yet again, and let's see if this would have played out. Oh, and yeah, eventually, see what I had a good stop. I placed it right above this fair value gap, touched it again, and then eventually it hit take profit. So yeah, overall, this is just how I trade using fair value gaps. If you have any questions, let me know down below. But over the past couple of weeks, it has worked really well trading it at market open. It also sometimes works in Asia session, but I like to trade on the higher time frames because Asia session is a little bit more funky. But yeah, that's just everything to know about my entry model. If you have any questions, let me know down below. And yeah, thanks guys for watching.